All right, welcome back everyone to my GTA stats and review. We are going to be covering Q4 of last year and of course how we think 2024 is going to look. So to start with, I was really busy in Q4 and that's why I decided to do a quarterly update. Got my first ever Directors Platinum Award, which is, pretty solid actually. First full year in real estate, so I'm enjoying that. Needless to say, there's a lot to talk about. So let's get started and see how things shaped up last year. But this is actually something that's more than just about last quarter. This is a story that tells a really, really clear picture of what we've seen with GTA home prices over the last 20 some odd years. Just a continued story of growth. Not a bubble, but demand driven growth, which is healthy. And I just gave one quick little example here on the side of one of these articles because we see so much negativity in the press about real estate and that things are going to collapse and things are just not great, but this tells a very different picture. This is black and white. We're looking at average prices going back to 24 years ago at 243,000 in the GTA, with a steady growth around the 7% mark every single year. I mean, even with that huge lift in 2022, a little bit of irrational exuberance, we've talked about that. We've still stabilized. Our prices did not collapse. And again, that is because there is demand, a lot of it. And so that pent up demand, let's call it, on occasion, we have external forces that kind of come into play and tend to hold people back and put people on the sidelines. And then, when things ease up, everyone jumps back into the market all at the same time. And that's what happened in 2022. And that was a lot of the COVID, backlog, let's call it. Now we have a different story of rates. So we've had historic high rates that have affected the amount of sales in our market. And that's going to change too, because every single economist without exception are all calling, including the central banks now, they're all signaling for lower rates going later into the year. We'll talk about that. Inflation. We wanted to get it back on target. All the central banks had, a plan of, increasing rates at a historic pace in order to get this under control. And it's worked. It takes time for these changes to work their way through the system. And so we've seen what's happened. It's working. Our inflation is back under control, near that 2% market, 2% mark where they'd like to see it. And again, that's going to benefit all of us over time because nobody wants to see our inflation, growing at 8.1% or higher because that's the direction it was heading. So they've cooled things down. Real estate prices are still very stable. We'll get into some other charts about that later. So that's all good news for us long term. Mortgage payment increases. I mean, a lot of us are seeing that who own mortgages, and 35% of households own households in Canada with a mortgage. So some of us are on variable, some of us are on fixed. 75% of mortgages, though, are fixed payments, which will have the least impact. Okay, so you'll see that already. I mean, it says 40% of mortgages have seen payment increases and renewals already out of all those mortgages that needed to be renewed under the higher rate environment. Well, it's over 50% at this point. So nearly half have already renewed in a higher rate environment and no serious impact there. People are managing it. They're changing their spending habits. I got a nice little chart to show you about that on the next slide. But needless to say that a lot of that has to do with our strong economy. Yes, it has been a little softer as of late, but again, that's all to do with the rates because the rates work their way, these higher interest rates, they work their way through the entire economy, okay? So back to some of the other little stats here. Fixed rate mortgages have seen increases and will see increases of 20 to 25%. Variable rate mortgages and variable payment mortgages will increase up to 50%. So they'll see the biggest impact. And variable rate with fixed payment mortgages, they'll see increases of about 40% by 2025 and 2026. So there are some increases that have already happened. Like I said, about 50% have already renewed in this higher rate environment, and there's still more to come. Most mortgage holders plan to cut spending and increase their principal payments. So just in this little survey of mortgage holders The first two columns here show that, you're talking a significant amount, almost half of the uh, mortgage holders are going to be spending less and actually increasing and making more larger payments on their principal amount of their mortgage, basically to offset the higher interest rates. So that's pride of ownership. That's people who take pride in their real estate and the mortgages they hold on that real estate. Um, Market is hypersensitive to interest rates. Well, that's true. This chart clearly illustrates that as rates go higher, sales pull back. And the opposite is true is when, we're in a low rate environment. So you can expect, and that's why a lot of people in this coming year in 2024 are basically saying, look, sales are going to increase because if rates are going to come down as everyone's expecting them to, or at least begin to come down, you will see a direct impact on sales as well. Low unemployment limiting distressed sales. Another interesting statistic here. So our labor has a huge impact. Like when we have unemployment and it's high, that also impacts distressed sales. But when unemployment is low or near record low, which it is now, you also see a near record low mortgage arrears, which is 0.1%. That's almost the lowest on record ever, which is pretty surprising, I'm sure, to most people. But again, a lot of that has to do with everyone's working, everyone's busy, everyone's bringing money in. There's income there to support it, and that's why we have that cushion, and it's not allowing for mortgage arrears to increase, at least not at any significant or alarming levels. Little chart on the right here will indicate the 12-month new listings totals. Now, if you go by year, you see there is a trend line here. We're not far off the trend line. So yes, listings are a little bit lower than the average. It's going off the trend line a bit, but it's starting to uptick again. And just now in January, you've seen a 30 some odd percent just to start off the year, January over January. So you're going to see more sales this year. It's already clearly indicated in our first month of the year, and that's going to continue. Housing demand fundamentals strongly outweigh supply. Well, this is very true, and it continues to be true. We have a terrible home start, with our construction home starts being way below the demand. And that's what's been a large problem for us. So although we do a great job bringing in a lot of immigration, only 2% of those immigrants go into the construction sector. And that's just not enough because we have a lot of people in that sector that are retiring. And we need to replace those construction workers so that we can continue to keep up with the demand for our home starts. This chart on the right over here, fascinating. I really wanted to share this information. So when new immigrants arrive in Canada, the majority, if not all of them, rent in year one. Well, gradually from year one to a 10-year average, you'll see that the percentage of home and real estate ownership increases to 70%, which is the Canadian-born average. And then the immigrants actually go beyond the Canadian-born average. They go above 70% after that 10-year mark. So interesting, you see these numbers of people coming in just in the GTA, let's say, 150,000 per year or 200,000, 70% of them are going to own property or real estate in the next 10 years. And that's annual. So guess what? The immigration levels that we're bringing in are supporting our economy and are helping our real estate industry. And that's what we want. We want a healthy real estate market. So keep that under your hats. There is growth on the way. And if anyone tells you different, they just don't know all the statistics here. Population growth versus home prices, they're linked over time. And you can see a lot of the countries that bring in their population growth is directly linked to the growth in their home prices. And Canada's right up there. So there is a real correlation between the amount of population growth and home prices in particular, a lot of these industrialized nations. You can see it right here on that chart. Outlook for 2024. I mean, look, we're looking at a robust 2024. As I mentioned in one of the previous slides, we're looking at a significant increase in sales from the previous 2023 year. And you saw already a 30% jump just in January. Expect that to increase even more as the rates begin to pull back after the Q2. So quarter two, quarter three, you'll see them start to tick back. You'll probably see a little more aggressive rate reduction, they're saying, in the last half of the year. And as those rates come down, you better believe it's going to impact home sales. So looking for those rate cuts beginning in Q2, I think it's going to be a balanced market for sellers and buyers. So it's not going to be a buyer's market or a seller's market. I believe it's going to be a balanced market for 2024. We will see a modest increase in GTA sales and GTS sales volume and prices. Because I think that's all in the cards for 2024, and rents are beginning to stabilize now. So we're not seeing those crazy increases in rent anymore. In fact, we're starting to see it roll back a little bit in some markets in the GTA. So rents are also starting to stabilize. Now, a lot of these statistics can vary from micro market to micro market. So if you live in Toronto and you live in, East York or Leaside, or if you live in the downtown area, or if you live in Pickering, those stats can vary a little bit. So it's good to keep in touch with statistics for your market. And of course, I have all that information available for you. So feel free to reach out. Thanks for taking the time to listen, and I'm looking forward to catching up on the next quarter update.